The financial world is at a crossroads. On one side stands traditional finance, the centuries-old system of banks, stock exchanges, and central authorities. On the other, a disruptive force has emerged: cryptocurrency and decentralized finance, DeFi. For years, crypto was dismissed as a niche experiment, a digital fad for tech enthusiasts. Today, it challenges the very foundations of money, payments, and global finance. As we enter the next decade, the question isn't whether crypto will matter, it's how it will compete, coexist, or potentially overtake traditional finance. This is a story of innovation, risk, and the evolving power structures of the financial world. Let's explore the forces at play and what they mean for the future of money. The foundation of traditional finance. Traditional finance is built on centuries of trust, regulation, and institutional control. Banks, investment firms, and stock exchanges serve as intermediaries, facilitating savings, loans, investments, and payments. This system works because it is centralized, regulated, and insured. Deposits are protected, transactions are monitored, and governments enforce contracts. Stability comes at a cost: slower innovation, high fees, and barriers for those outside the system. Traditional finance has survived wars, depressions, and technological revolutions. Its resilience comes from authority and regulation. But critics argue that its centralized nature limits accessibility and stifles innovation, creating an opening for a decentralized challenger. The rise of cryptocurrency. Cryptocurrency emerged with Bitcoin in 2009, promising a decentralized, peer-to-peer alternative to traditional money. Unlike fiat currency, crypto doesn't rely on governments or banks. Transactions are verified on a blockchain, creating a transparent, immutable ledger. Early adopters were enthusiasts, libertarians, and tech pioneers. Today, crypto has evolved into a multi-trillion-dollar ecosystem, including Ethereum, stablecoins, and decentralized finance platforms. Crypto offers several advantages: lower fees for cross-border transactions, accessibility for the unbanked, transparency through blockchain, programmable money, and smart contracts. Yet volatility, regulation, and security concerns remain challenges. Despite this, crypto continues to attract investors, startups, and institutions seeking innovation beyond the constraints of traditional finance. DeFi, the new frontier of financial services. Decentralized finance, DeFi, takes crypto beyond currency. It replicates banking, lending, borrowing, and investing without intermediaries. Smart contracts replace contracts and regulators, operating autonomously on blockchain networks. DeFi offers unprecedented access. Anyone with an internet connection can lend, borrow, or invest, often earning higher yields than traditional banks. It also reduces reliance on centralized institutions, promising a financial system that is more equitable and resilient. However, risks exist. Smart contract bugs, hacking, and regulatory uncertainty make DeFi a high-risk environment. Yet the potential to democratize finance and innovate at speed is undeniable, positioning DeFi as a major player in the next decade. Trust and security. The traditional advantage. Traditional finance benefits from centuries of trust. Banks and institutions are regulated, insured, and accountable. Customers know that deposits are protected and transactions are reversible in case of fraud. Crypto, in contrast, operates largely on trustless systems. Blockchain technology ensures transparency and immutability, but users are responsible for private keys and security. Hacks, scams, and lost wallets have caused billions in losses. For mass adoption, crypto must overcome trust issues. The next decade will likely see hybrid models, regulated crypto exchanges, insured wallets, and institutional oversight. Traditional finance's advantage lies in its established reputation, something crypto must earn, not inherit. Speed, accessibility, and innovation. The crypto advantage. Crypto moves fast. Transactions settle in minutes or seconds compared to days in traditional banking. Cross-border payments are cheaper and faster. Anyone with a smartphone can access crypto. making it a lifeline for the unbanked. Innovation thrives in crypto's open-source environment. Developers create new tokens, lending protocols, and decentralized apps daily. Traditional finance is slower, constrained by regulation and legacy infrastructure. This speed and accessibility give crypto a disruptive edge. In regions where banking is limited, crypto provides real-world solutions. In the next decade, these advantages may allow it to capture significant market share, especially among younger, tech-savvy populations. Regulation, the double-edged sword. Regulation is the battlefield for the next decade. Traditional finance is heavily regulated, ensuring stability but limiting agility. Crypto initially flourished in a largely unregulated space, but governments are now stepping in. Regulatory frameworks could stabilize crypto, making it safer and more attractive for mainstream adoption. But overregulation risks stifling innovation, driving projects to more permissive jurisdictions, or creating fragmented markets. The winners will be the platforms that balance compliance with innovation, offering security, transparency, and access without sacrificing the core benefits of decentralization. Institutional adoption and market integration. The next decade may be defined by institutional adoption. Hedge funds, banks, and investment firms are increasingly investing in crypto, integrating it into portfolios and offering services to clients. This integration bridges the gap between traditional finance and crypto. It provides credibility, liquidity, and market depth, while also exposing crypto to the scrutiny and regulation of institutional frameworks. Financial giants entering crypto could accelerate mainstream adoption, but may also reduce decentralization. The challenge will be maintaining the ethos of crypto while benefiting from institutional support. Volatility versus stability. Traditional finance is relatively stable. Currency values, interest rates, and stock markets fluctuate, but extreme volatility is rare. Crypto markets, in contrast, are infamous for dramatic swings. Volatility attracts speculative investors, but deters mainstream adoption for savings, payroll, and daily transactions. Stablecoins attempt to mitigate this, offering cryptocurrency pegged to fiat value. Over the next decade, volatility management will be critical. Platforms that provide stability while preserving decentralization will gain a competitive advantage, bridging the gap between speculative markets and everyday finance. Global impact and financial inclusion. Crypto's most transformative potential lies in financial inclusion. Billions of people worldwide lack access to traditional banking, but crypto offers alternatives. Mobile wallets, decentralized lending, and peer-to-peer payments allow access to global finance without banks. Traditional finance has struggled to reach remote or underserved populations due to infrastructure, costs, and regulation. Crypto can leapfrog these limitations, creating new economic opportunities and reshaping global markets. The next decade may see crypto not as a replacement, but as a complement to traditional systems, extending financial services where conventional banks cannot. Environmental considerations. A growing concern for crypto is energy consumption. Proof-of-work systems like Bitcoin require massive electricity, raising environmental questions. Traditional finance has a smaller energy footprint per transaction. However, crypto is evolving. Proof-of-stake networks, energy-efficient protocols, and carbon offset initiatives aim to reduce environmental impact. Finance in the next decade will increasingly consider sustainability, and crypto must adapt to compete responsibly with traditional systems. Competition, collaboration, or coexistence. The next decade may not be a simple battle of crypto versus traditional finance. It's likely to be a mix of competition and collaboration. Banks may integrate blockchain for efficiency. Crypto platforms may adopt compliance and risk frameworks. The winners will be those who innovate while building trust. Those who leverage technology to improve access, reduce costs, and provide secure financial services without losing the benefits of decentralization. Hybrid models are emerging: centralized exchanges with regulated frameworks, tokenized assets supported by traditional institutions, and cross-border payment networks combining fiat and crypto. Lessons for investors and consumers. For investors and consumers, the coming decade is full of opportunities and risks. Diversify. Balance investments between traditional and digital assets. Educate. Understand blockchain, DeFi, and market dynamics before committing capital. Secure assets. Use wallets, security protocols, and regulated platforms to protect holdings. Stay informed. Regulation, technology, and adoption rates will shape the landscape. Crypto offers high growth potential, but traditional finance provides stability. Strategic engagement with both may be the most prudent approach. The cultural shift. Crypto isn't just financial, it's cultural. It represents a shift in how people view money, privacy, and control. Younger generations are more comfortable with digital assets, peer-to-peer exchanges, and decentralized platforms. Traditional finance may need to adapt culturally, offering more transparency, faster services, and digital integration to appeal to a new generation. The battle of the next decade isn't just about money, it's about values, expectations, and identity in a digital world. Predicting the next decade. Looking ahead, several trends will define the competition. Increasing institutional adoption of crypto. Government-issued digital currencies integrating with fiat systems. Expansion of DeFi and tokenized assets. Greater emphasis on environmental sustainability. Hybrid financial models bridging traditional and digital finance. The companies and platforms that succeed will combine trust, innovation, security, and accessibility. Those that fail to adapt risk irrelevance. Who wins the next decade? Crypto has disrupted the financial world, offering speed, accessibility, and innovation. Who adapts, innovates, and survives in a world where money itself is being reinvented?